All right. Hey, everyone. Mark here. Thanks for joining me for another Greenbridge Investing market analysis. So today's Wednesday, and I wanted to go over a couple of interesting things here with some recent trades that we took, of course. And I want to talk about what's going on with the stock market, because again, this is the beginning of what could be a broader bearish fake out, and it's important to be aware of what type of strategies will work in this type of setting, what to expect and what can go wrong quickly so that you can make adjustments. All right, so if you're new to the channel here, hey Hamid, make sure that you send the tickers that you'd like to see now so that I can go through them in the chat. I want to try to make this session an hour or less. I'm going to go through my stuff quickly, and I want to try to spend more time on the things that you want to see. So any, whether market, stock, whatever it is, put it in the channel, and I'll go through my stuff quick. All right, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, let me know if my sound is low. It should be okay. But, I've been just working on with the podcast, trying to adjust this microphone so that it could be, easier to hear me. Anyway, so I want to start here with, before I get into the stock market, I want to talk about Bitcoin real quick because, it's in a similar situation. Bitcoin seems to be reacting to the stock market, right? We had this Bitcoin sell-off here, as you can see, and that was also the stock market sell-off at the same time. Bitcoin has been hesitating, and we've been getting questions about the buy signals because there have been a couple of buy signals in here, but we have not sent them out. We have not shared them by text or by email. Why? Because this section right now it's tricky. There are buy signals, but that does not mean that they will follow through. All right, and this bearish candle, this whole bearish momentum structure right here, we cannot ignore that. So while we have an inside bar today to go along, again, it hasn't closed. This is going to be a tough signal to call. We may send something out, but if we do, it's going to be extremely aggressive because right now, probability says that if there is a buy signal here, it's likely to fake out. Okay, now there's no guarantee that it'll fake out. Maybe this thing will be the beginning of the next leg, but it's not really shaping up into the ideal signal. That's why it's hard to understand sometimes why you may see a pin bar or an inside bar and say, oh, that's a signal. But that's not enough, okay? We need to see other things along with that to really help us gauge the probability. So just wanted to point that out real quick. And you're going to see this across the board. Someone in a chat room brought up, SRX, USD, or no, SXP, I'm sorry, SXP, USD. Because, you're going to see similar situations across the board, right? This is Swipe, very popular on everyone's radar. Hey, DJ. Hey, Mike and Abhishek. Thanks for stopping by, guys. So, again, nice setup going on over here after this pullback. But again, like I said, if Bitcoin does not follow through, these other coins are probably not going to go very far. Now, if you want to take a chance and you'd rather buy one of these instead of Bitcoin, I mean, again, you have the inside bar and you can measure your risk from this low of 154. So you figure around 150 is where you're going to measure your risk from, maybe slightly lower. And there's plenty of potential here if that first leg goes. Now, if the first leg goes and we miss it, that's okay, because there'll probably be a continuation pattern along the way that we can use to get in on the second part of that leg. Hey, HS, thanks for stopping by. All right, so I wanted to point those two things out real quick. Now, let me jump over to the stock market. If you guys have any questions about these, about Bitcoin or any of these alts, just let me know, and I'll go back to it. So we've been talking about earlier in the week and even going into Friday. We said, people asked us, is now the time to buy? Is now the time to buy? And they were asking us like around here. And we said, no, we need to see stability. So what's this today? What's going on here today? Is this the time to buy? And this is really the point of my session here, what I want to address. And that is, over the short term for a swing trade, okay. We have some stability here. We have a nice green candle. This is probably going to close strong. So if you take out the high of 11,482 on the NASDAQ 100, which is what this is, you're probably going to see some continuation momentum into tomorrow, perhaps, into the close of the week. Now, for swing trades or short-term momentum trades, like day trades, this makes sense. So if you have stocks, and we'll take a look at a few, if you have some stocks that have been acting relatively strong, like Hibbett Sports, you saw, I don't know if I put the chart in the chat room earlier, you saw how that thing outperformed today. But that was a pretty obvious play if this market bounced, right? Because that thing was acting relatively strong. So trades like that, okay, fine, because you're in it for very short term. You're looking to play a short-term bounce, meaning it may be good for a few days, maybe a week. But this is what we have to keep in mind, and that's this up in here. So I'm not anticipating a higher high on this next leg. I'm anticipating a lower high. If we see that lower high develop in this area and we are not, at the higher high, or worse, we make the higher high, but we generate a failed high and we get like a pin bar up there or something, you better believe we're going to be looking for shorts. We're going to be aggressively looking for shorts, whether it's in the Qs again, IWM, in the DAX, whatever we can get our hands on. Maybe some particular stocks we'll look at. Because if we see the lower high in one of these areas, this price area here is around like the low 12s, around there. And then we have this area here, the mid 12s, right? Those are the inflection point areas to watch for over the next week or two, because it can take some time for this to play out. It's not going to be like in one bar. So if we see the market bounce up to those areas, again, those are the targets that we're looking for our short-term longs. Whether it's, a swing trade in a stock or whatever it is, that's what you're looking for. Or that's what we're looking for. If it fails in one of these areas, then we're likely to see a test of the low again. And that's not going to signal a bear market. It's important to understand that. We're not anticipating a bear market. And I've written this, in a few places. What it will signal, though, is a range bound situation. Okay, we're likely to get a triangle from here, like gold. Gold is trying to break out of that triangle, but a similar example, and we're going to take a look at gold, but gold would be a good example of what I'm anticipating in the broader stock market. So that's like the main point here that I wanted to deliver. I want to come across. You have to be prepared for these inflection points where more selling is likely. Now, I could be wrong. We may blow through these points, or we may touch one. We may get the sell signal. We may pull back and not push to that low and make a higher low, right? Which could be part of the range, or maybe the market wants to find strength. Again, we're not making predictions. All we can do is go by the clues that the market provides and then adjust from there. But right now at this point, we have the buying, and that's acceptable. And this is a good signal for swing trade longs, but keeping that short-term idea, or being nimble as far as using conservative profit targets, or being prepared if something goes wrong, to get out quickly, because this broader bearish momentum may still be in play. And Andrew pointed that out yesterday in the podcast when he talked about the trend line break that he pointed out. Okay, a lot of times that's usually when you see like a broad trend line break like that, and he was talking about this long trend line that we've had for months and months that's broken. That could be the beginning of a new structure. All right, and that structure, like I said, I'm anticipating is a triangle. The lows of that triangle, the current low, 10,939, whatever that is, that may be the low, or maybe slightly lower, could be the lows of that triangle, which will provide attractive buying opportunities, both for swing trades and inventory trades. So I will keep an eye out for that as well. So those are the levels to be noting as this market unfolds. Okay, so that's the NASDAQ. The S&P is going to be in a similar situation. I'm going to show you the S&P real quick. Okay, and then I want to get to your stuff. Also, I want to show you gold here. So let me pull up SPX USD. Again, you guys, hey Michael, hey Jay, if you guys have any particular symbols you'd like to see, please share them in the chat. So like again, S&P, same situation. Now, look, that S&P pulled back to that 3,400 old resistance, and now it's acting as a new support. This is what a support looks like. All right, it doesn't touch it exactly. Sometimes it can blow through it, look like it's gonna, go to zero, and then the next candle comes right back up. That's characteristic of a support. So, we're still supportive, and that's why, it doesn't hurt to look for some aggressive longs with tight targets. Okay. In order for these markets to really, for our outlook to change and for us to be more neutral or bearish, they need to take out their range supports. For example, on the S&P, that would be 3,000, that 3,000 area. So as long as we're above that, we could be in a broad consolidation. So just something to keep in mind. Sure, HS, XRP, got it on the list. Thank you. All right, so that's the broader stock market. Now let me just pull up HIB. This was the trade of the week that I sent out earlier today. And look at this thing. You can see the trade information right here. By the way, if you're a free subscriber to Greenbridge, you get these in your email. Someone had asked, and I have to answer this, someone had put a question in one of the comment sections of a previous video because he wasn't getting the emails and he thought maybe that, it was like a trial thing and you have to pay. No, there's no trial. If you're a free member of Greenbridge, you should get the trade of the week emails every week when we send them out. So if you don't get one, either it's going into your spam or perhaps we didn't send one out. I know like there was 1 week, like 2 weeks ago, we did not send one out. So just keep that in mind. If you have given us your email on greenbridgeinvesting.com and you've registered as a free subscriber or free member, you should get these, okay? And you don't have to trade them, paper trade them. All right, but at least you get an idea of what our trades are like and how we define everything in advance. I'm bringing this one up, not because it's did it reach its first target, 36.86? And wow, went to target one. Look at that. It's at target one. What's the high right now? 36.86. It reached the target today. In 1 day, went to the first target. But this was tricky because it gapped through that buy stop at 35.15. Did anyone take this trade by any chance? And it's okay if you didn't. But yesterday's high was 34.85, and today's open was 35.37. Right, and the buy stop here is 35.15. So this wasn't exactly an easy just, hey, let me set the buy stop and hey, I'm in. It wasn't like that. This one was one you had to monitor and you had to get in at a worse price. You can't chase it now. So if you're not in, especially it's tough when it gaps like that. It's tough because you just have to have the confidence to do it and say, okay, I'm going to get in at a worse price. And the reward risk was kind of tough to begin with on this thing because I used conservative targets. All right, basically all my targets are distributed between here and 40. This thing can go higher than 40, but the whole idea, and the reason why I'm pointing this out, okay, no problem. The reason why I'm pointing this out is because of the relative strength concept. And I talk about this a lot in our chat room. Do you know what I mean? Who can tell me what I mean by relative strength? While you guys put that in the chat, I'm going to just talk about how this relates to it. The S&P had pulled back, right? And the NASDAQ had pulled back, and they were poised to bounce or to retrace, a bullish retrace. This stock had barely pulled back, number one, okay? And number two, yesterday was poised to break out while the NASDAQ and S&P were still showing some weakness. That's relative strength, okay? So I was like, wow, if that market bounces, this thing is probably going to push because it's strong. It's going to probably outperform. And that's what we got today. So not an easy trade to take because of that gap. But, at least you can learn something from it if you're not in it. So nice, nice to see. First target reached. They don't always go to their first target like this, especially in the same day. It's not a common thing. All right. So I want to point that one out. And as far as other trades, all right, I want to talk about the dollar franc because this was a trade of the week over the previous week. And this one went toward its first target, right? Took a couple of days, went to its first target, went slightly higher, and now you can see we're getting this red candle. Not only that, we have this pin bar, sort of a pin bar. That's not really a pin bar, but it's pin bar-like. And 91.55 is that low, and we took out that low, and it looks like we're closing weak on this thing. I normally don't get out of these early, okay? but I'm strongly considering sending out a signal today, an adjustment signal, to just exit this trade if you're in it. The reason is because this trend has not been friendly at all the entire time. It's been bearish, and this trade is still green because we have it from 90.85. So why let a green trade turn red when there's no reason to, especially when there's a sell signal in it, especially a sell signal in a generally bearish trend. We have a lot of things working against us. So you know what? It's green. Why not just take the money off the table and be happy with it? Okay, so that's what I'm thinking. I haven't sent it out yet. If you're in this trade and you agree with that and you want to exit early now, by all means, it's not a bad idea. I'm also thinking, you know what? If it fakes us out and we get a bullish candle again next week to get back in, we'll get back in. Okay, we'll just buy it again, no problem. Now, but what's also compelling me to make that adjustment is take a look at these. GBP, USD. Look at that. Okay, so that's a pretty nasty pullback, but look at that pin bar. This thing has been generally strong, right? This is a bullish chart. Not only that, but this is a fake out zone right here, and you have that bullish pin bar. That's a long. So if anything, I'm thinking about sending this out. Now 30.23 is the high of that candle. So the trade signal will probably be around 30.35 or 30.45. I have to give it some room to let it work a bit. But that's what I'm thinking. Now, the pound is a little wild and the stop is wide. I mean, look at that, 28.85. So right off the bat, you're looking at, 150 pip stop or something like that. It's a tough one to trade, but when it goes, it goes. So I'm considering that. Keep in mind, it's the same trade as gold. All right. So that's, again, I'm not sharing official trades here. I'm just talking about the ideas before we send them out. Something may change and we may not send that out. But right now, that's on my radar. All right, to send to our members by text, by email. Now let's take a look at XAU USD, which is gold. And look, hold on, gold. Now remember before I was talking about the S&P and NASDAQ and I said I'm expecting a triangle? Look at this nice triangle in gold. Okay, look at this. This is a continuation pattern. Now this is what I'm anticipating in something like the S&P and the NASDAQ. Why? Well, we're going into the US election. It's coming, it's getting closer and closer. As more uncertainty unfolds around that, which, again, some dumb news comes out, whatever it is, makes the market uncertain. And this is usually what you get, okay? Something like this. So in that process, as you can see, gold made a low, right? Just like the NASDAQ, and then it started developing another support nearby. So those type of lows are a form of stability, and what I would like to see in the NASDAQ for longer time frame type of trades, like a position trade. But until we see something like that, swing trades would make the most sense right now with very conservative targets. So back to gold, Andrew sent out this one earlier. Okay, we sent this signal out, and as you can see, based on this pin bar, and look at this. Where's this thing right now? 1950. Okay, and I believe the entry was at 1945. So this thing is 5 points in our favor, and that thing looks like it's going to close strong. Now, someone had brought up, I think it was Sean, brought up a interesting point about this triangle, saying that, hey, based on the classic chart pattern, this is a bearish triangle, okay, and is likely to lead to a bearish outcome. Or his question was, based on the classic chart pattern, should this lead to a bearish outcome? And here's the thing. So we get these triangles or whatever type of formation you see, they're typically random, okay? Typically. What gives this any type of context is the structure that we have before it. So although the triangle itself, if you look at the textbook version of the triangle, you can argue that it's got a bearish connotation or bearish, idea behind it, that loses all its credibility when it's in a context of a bullish trend, right? So that's why, for one, we'd never short something like this. And number two, if a long signal appears, we're willing to take that aggressive long, even though it may not be at the ideal location. All right, and that's why Andrew sent that out today, and it looks like a good trade so far. So I'll answer your questions on gold, but I wanted to point that out for those two reasons. Now, I think that's pretty much the ones I wanted to cover. Let me see, was there anything else? I don't think there was anything else. Tesla real quick. Do I want to? No, actually, let me see. Hold on. What's going on with Tesla? Oh, yeah. Okay. That's a tough stock. All right. So I think that's pretty much it. Let me go over what you guys have. All right. And while I'm doing that here, I'm just going to pull up, I'm just going to put link on here because that's one that everyone likes to see. So let's see what we got here in terms of questions. And again, I want to thank you guys for participating here and asking questions. So DJ, would you short the SPY on the next bearish pin bar after taking out the low? Okay, DJ, so let's take a look at the SPY. And yeah, definitely. Like that's, so like I was pointing out with the NASDAQ and the S&P, obviously for people that may not know, the SPY is the ETF of the S&P 500. And it's the same idea. If we see that lower high, either in this region, somewhere around there, or we see the failed high up in this region, which is possible, okay, which is very similar to a double top. And believe me, when the market is pushing those levels, especially if it pushes this high, you're going to see a lot of hype. You're going to see a lot of YouTube commercials about, oh, you know, we have this special stock system, or we have this special trade signal that comes out at a certain time of the day, and our customers are making $10,000 a month with the system. Okay, you're going to see a lot of that, and they're going to say stock market's going up forever. Keep in mind, these are very, very vulnerable locations. So to answer your question, DJ, if we see a pin bar or some kind of bearish formation develop in one of these locations, you better believe we'll be looking for shorts, okay? Whether that's in the IWM, the Qs, the SPY, UVXY, you know, we're going to be shorting something, and probably aggressively, but we would like to see the formation. Shorting without a formation and just at the location is too aggressive, because we've gotten caught a number of times, you know, shorting too early, and it just keeps going, and then you get caught in it. You don't want that. Okay, so even though you don't get the best price waiting for confirmation, at least you have momentum on your side, and that's important. All right, so that answers your question. HS, can you please go over XRP? Yeah, let's do it. XRP. Okay, that's Ripple. So now, similar to Bitcoin, right, and similar to that other one, Swipe, we're going to see individual candles in many of these altcoins, right? I mean, this looks exactly like Bitcoin. We have that nasty sell-off, all right? We have this little hesitation area right here, and it's trying to give us a buy signal. It's trying. And it's not a horrible location, because this is an old resistance at 20 to 23 cent, 23.5 cent area, and it's acting as a new support. Here's the thing. So if Bitcoin does not follow through, this will break, okay? This will most likely break. So Bitcoin is still your leader. Is this a bad place to take a swing trade? It's not a bad place. You do have a support. You do have some sort of structure developing here, okay? It's trying. There is some stability. You can make an argument for a failed low. You have pin bars. So there's something going on there. It's not in a straight, you know, you're not buying into just straight bearish momentum. So the high of that is 24 cents, 24.25 cents, if that makes sense. So, you know, you want to put your buy trigger just slightly above that, put your stop slightly below, and then it's up to the market from there. If Bitcoin, I'm going to tell you right now, if the buy signal goes off, because we saw this same type of price action back here, okay? Got buy signals all over the place. Like every altcoin was showing a buy signal. And we took the long in Bitcoin. We got stopped out in that following bearish move, okay? We got stopped out at 950 when that occurred. So you have to keep in mind, all these things are showing buy signals at the same time. So you have to choose one, because they're all going to behave pretty much the same, unless of course some scam news comes out, as we've learned, and the thing goes and does its own thing. But otherwise, if it's just following Bitcoin, if Bitcoin fails, these will fail too. So that's the risk. That's an additional risk you must consider besides the structure and the setup and the location. Okay, it's like trading a stock against the S&P. It's the same idea. Bitcoin is like your index. So I like it. I like it as a long. I also like the general idea of Bitcoin long, but it's a tough spot, and we're still dealing with that bearish momentum. So, you know, it's not the ideal setup. just a few things to keep in mind. We may send out an aggressive trade on Bitcoin, but we're going to warn it's very aggressive, and there's a good chance that it can stop out. So if people don't feel like sitting through another stop, then I would, not recommend the trade. It's not the ideal trade. All right. So anyway, thank you for asking. Now, DJ, okay, no problem. All right. So Mike, you want to see Ethereum against Bitcoin? Okay. I think I have that here. Let me see. Do I have that? No, I think I have to type it in. All right. So ETH, BTC. And well, so here's a situation. It's similar, right? Similar situation. Remember, these things don't move on their own. So Ethereum, this obviously looks like Ethereum. It's Ethereum in terms of Bitcoin. A lot of times these can be confusing because it's like a cross pair, and this one will appreciate if Ethereum can appreciate faster than Bitcoin, right? This thing should go higher. You have a similar situation where you have a failed low right here. That's an inflection point area, so not a bad place to think about a long. You have an inside bar breakout, so you do have a buy signal in play. Your risk can be defined by this area. This is a little tough one. I would put it around there. What is that? 03. That low there is like 0327 Bitcoin, if you want to call that a number. I don't like these pairs because when they're convoluted like that, I prefer to just see it in dollars. But that would be basically a tight stop. If this thing can run a bit, I mean, you should be in good shape. Keep in mind, Bitcoin needs to do something, and Ethereum needs to do something faster, and you're looking at an inflection point right there. If you get that hesitation there, you're likely facing a head and shoulders, and it's wise to at least reduce risk at such a point. So that can kind of give you an idea of reward risk, based on that. If it clears that area, then, at least you have a test of the high is within reason, which would be up in there. Okay, at 04 Bitcoin, 0.04 Bitcoin. Okay, so just something to keep in mind there. In my opinion, it's just, I think you're better off going with the against dollars. But anyway, all right, cool. Thank you for bringing that up. I hope that clears it up for you. So AD, hey, thank you for joining us. Do you know why stock market went bullish without volumes? All right, well, you know what? Because markets can move without volume. They do it all the time. Just look at the way markets move after hours. If I turn the volume here, actually volume is not going to really matter on this instrument. Let me go to something where the volume matters, like the Qs, okay? So here are the Qs, and let's take a look at the volume. Now, so you say no volume. We had higher than average volume, yesterday. And so the average volume is obviously that blue area, and we're slightly higher than that. So there's some volume in there, relatively speaking. But to answer your question, why did the stock market go up without volume? Markets don't need volume. It's volume. A lack of volume just means the move that you're seeing has less credibility, usually. But a market can do ridiculous things with no volume. Volume is not a requirement. I've seen markets, make dramatic lows, dramatic highs, this and that on no volume. And that's price action that is particular that you'll see after hours, where it'll make some kind of move and you're like, well, what's going on here? There's no volume. It doesn't matter. There could be, when the market's closed especially, there could be one player or two players that are moving the market around because there's no volume. So I wouldn't really read too much into that. All right, so thank you for asking. Let's see, Shashank, near 2000 is a good to book profit for gold. Well, Andrew put the targets on gold, on the gold trade that we sent out. I don't have them in front of me. But I'll tell you what, in terms of 2000, right, 2000 is right here. That's a little over 2000. Yeah, 2000 is a psychological whole number. That's definitely not a bad area to lock in profit. I know we have profit targets before that. Okay. Right, and Shashank says mostly volume are fake. That's true. I'm a big believer in volume numbers that come from exchanges and stuff like that are not very accurate. And that's because you can hide orders, and you have all these different ways. A large fund does not want to show what they're doing. So can you really go by the volume? And someone like Michael brought up an interesting point about, volume may give you a good clue of what the herd might be doing, because the herd often doesn't hide their volume, especially when they're on small shares. So that's an interesting perspective. But I don't use volume, for those reasons. I just rely on price action and the speed of the price action. Now, so to answer your question about 2000, I would actually probably reduce risk before 2000 and then let some ride to see if it breaks through. That's usually the best thing to do when you're dealing with such a heavy psychological inflection point. Okay, so Shashank, Tesla is in correction mode. Okay, so Tesla we get a lot of questions about Tesla. Obviously there's a lot of interest, high profile stock. And so here's the thing with Tesla. This thing has pulled back. I'm sure it caught a lot of people off guard because, people didn't expect it to pull back that dramatically. It pulled back to this old inflection point, which I've talked about before, the 337 area. In fact, I think we talked about this in our podcast yesterday. If you guys haven't seen the podcast, make sure you check it out. You can see it on this channel here, the Talking Markets with Mark and Andrew. And we talk about different things, stocks and different markets on there. And we also have more of a fundamental angle on things, especially with Henry and all that. So it kind of gives you a nice round perspective, or a nice broader perspective, instead of just listening to me and technicals, because that's my focus, okay, especially short term. So as far as Tesla goes, again, his question, hey Alice, his question here is correction mode. Well, this is going to follow the NASDAQ most likely, okay, and the S&P. So today, you see it gave us this, look at this candle, right? This thing is still open. It's got about 30 minutes. We're getting a bullish inside bar, all right? So this correction, yes, the broader structure, I would not ignore this, okay, which a lot of people, especially on Robinhood, are probably going to do, and they're all going to be buying into this, okay? But just like the NASDAQ and the S&P, I'd be looking for the failed high, right? Because most likely all these FANG stocks, this is not an official FANG stock, but all these FANG stocks like Amazon and the rest of them, they're all probably going to show the same failed high that you're going to see in the NASDAQ if we get that. So that's how I would play that. This is ideal for day trade opportunities in this thing, or very short-term swing trades with conservative targets, because I'm not anticipating a new high. It's no different than the NASDAQ. So this is, if anything, this is a really bad place to short Tesla is right now. So that's how I would look at those. I would consider those ideas. All right, hold on 1 second here. All right. So, wait, hold on a second. Sorry about this. Hold on. Yeah, I got a technical, these technical problems here. All right, there we go. So that's the deal with Tesla. All right. So any questions on that, let me know. Let me see what else we got here. Florin, is 27.2 a good entry for XAG USD? All right, so that's silver. Let's take a look. XAG USD. Now, so silver, I know Andrew mentioned this in the chat room earlier too. Silver is the CFD. It's a pain. The reason why we don't really call any trades in this is because the contract size is a little large for such a CFD, and it can be easy to get into trouble with something like this. So if we're going to do it, we're going to do it with gold. Gold is a little more flexible. All right, now silver follows gold, but silver has its own little behavior here. And to answer your question, right, his question is 27.20 a good place to buy silver? And yeah, actually the trigger here is 27.09. So yeah, you give it a little room there. Yeah, I would agree with that. But it's the same deal as gold. So if gold pulls back, this is going to pull back too. Your risk is going to be measured by this low candle here, the low 25.84. So figure around 25.70, 25.60. something like that, you know, with these, it's usually wise to put a wide stop because of the noise. It sucks when you get stopped out, though. That's why you have to be very careful how you size these things, okay? But it's very possible that, you know, you see some of that noise, especially if gold fakes out, and, you know, it's just a real pain. So just wanted to point that out. But to answer your question on silver, yes, that would be a price that, you know, we would be open to. Just keep those risk considerations in mind. Okay, DJ, UVXY, VIX got me good on Friday. Oh, well, it's tricky. You know, that thing is tricky. UVXY and the VIX. You know, so this thing here is the ProShares Ultra VIX short, meaning it's going to do the opposite of the VIX, right? So if the VIX, which is the sentiment index that measures the puts and calls being bought on the S&P 500, which is a great tool to use, by the way, when you want to get a sense of bigger picture things going on that you can't see. This was the sell-off, right? This was the sell-off. Andrew took nice advantage of that. And now that the market's recovering, right, this is going to go the wrong way because this is the opposite, right? So if the VIX goes lower, I'm sorry, if the VIX goes, okay, so this is short the VIX, right? So if the VIX goes higher, this is actually going to, I guess you could say, follow the VIX, right? Let's pull up the VIX. VIX, right? See that? So they're positively correlated. VIX goes higher, that means what? People are buying puts like crazy because they're chasing the market, right? And when the VIX goes lower, people they feel safe. They're more complacent, and they're getting out of those put positions, okay? Because they're like, oh yeah, you know, the market's going higher, and that's it. So it's usually a great measure of sentiment. By the way, since we're on the VIX, when we had this price action here, okay, there were a couple of days in there which really stood out where the market was making higher highs, right? And the VIX was also going higher. That should not happen. You should not see green candles on days that the market is making new highs. So that was a red flag, all right? What that meant was someone was buying puts while the market was making new highs. That's not normal behavior. So that was a clue that that there was a sell-off coming, all right? Nice clue to keep in mind. So anyway, so back to the UVXY, which is basically positively correlated to this UVXY. This instrument, by the way, is a very speculative instrument. People often use it for very short-term type of trades and basically gambling. But when you get this thing right, it pays off well, right? So Andrew caught the spike in the VIX, but the spike didn't continue, and now we're pulling back. All right, so this is where, DJ, as far as getting back involved in this, what you want to see in something like this is, for one, the next signal in something like this will be the lower high or the failed high in the S&P. So that you can't really go by levels on this thing because it's really going to depend on the S&P. So I would watch for that, right? The S&P, and that will give you your signal here to whether you want to buy calls in this thing, like Andrew, or you know, sell puts, or however you want to play that. So that's what I'd wait for. Technical levels on this thing alone are not very helpful, since it's really a derivative of a derivative of a derivative, you know. So I wouldn't really go by the levels on this thing. So use the S&P. Thank you for bringing that one up. All right, so Shashank, we talked about that. XRP, we talked about it. All right, no problem, Mike. Ludus, in short, explain to me what a failed low. Okay, there. All right, so question from Ludus here. Good question. In short, explain to me what is a failed low or failed high, because there is a lower low. Why failed? All right, so that's a good question. Let me go to an S&P chart, SPX, especially since we're talking about the VIX here. So a failed high or a failed low is really the same as a double bottom or a double top, right? So here, let me show you. In this situation right here, a failed high would be when the market goes slightly higher, gets everyone all excited, and then fails, okay, fakes out. It's really a fake out. That's really all it is. Same with a failed low. We see failed lows in bullish markets all the time. Here, I'll find one on the S&P. So on the S&P, everyone thinks the market's going lower, okay, because you have like a double top in place or a lower high in place. So everyone gets bearish. Everyone's calling for shorts. And what goes on? You get that, okay? If you notice, let me open up that formation a bit so you can see what I'm talking about. If you notice on this situation right here, this candle, right, this low is slightly lower than this low over here. You see that? You see that? How it's very close? That's a failed low because everyone thought it was a short. At one point in time, this candle was red and was pushing that low, and then it recovered. Now you have a failed low, which means you have shorts caught in there. Okay, that's a failed low, and it's a very bullish signal or sign. Okay, so that's a failed high and a failed low explained very quickly. So I hope that answers your question. And that's what we're looking for on this next leg, whether we get a lower high or a failed high. All right? And we'll be looking for shorts in that situation, which again, DJ, can be a good sign for you and the UVXY. Okay. Hey, Michelle. Alice, nice to see you. So Michelle, some analysis about ETH and BTC. Okay. So I went over, I'll go over ETH. We went over BTC, ETH, or yeah, ETH in terms of BTC. Let's take a look at Ethereum by itself, okay, or against the US dollar. Now, like I've been talking about, a lot of these things look like Bitcoin right now, where, you know, we took a look at XP, we looked at XRP, we looked at a couple of those, and they're all showing the same situation. They're all showing the same little formation. They're showing a buy signal in an area. Speaking of failed low, Ludus, this can be considered a failed low because it's not dramatically lower than these previous lows. So although it's lower, it's not making progress. Okay, so there's some discretion involved there, but I would consider this right now a failed low so far. So we have that situation, and it's trying to generate a buy signal. The thing is, Michelle, we're still facing this bearish structure, so it's a tough call. If Bitcoin does not follow through, like we may get this buy signal and Bitcoin may run a little bit. We may see a few hundred points. But if Bitcoin fails, right, or Ethereum, if it fails somewhere in this region, or if it fails up in here, then that's going to be problematic. You know, the thing, or even worse, if it fakes everyone out and fails much sooner. So that's a risk that we have to face, and that's why we've been slow to send out a new signal, because this isn't the ideal structure, you know, for a nice long signal. Usually an ideal structure looks something like where you have a nice clean trend, you have a nice clean consolidation or some kind of consolidation, and it's pretty tame, you know, not following something like this. That's sort of a red flag there. So we have to see. We're still open to it, so we have to see. But to answer your question, it's still somewhat attractive as along because the overall trend is bullish and it is giving a buy signal, and we can measure our risk from such a level. The risk here at 310, so you're looking at below 300, maybe 295 would be a good place to put a stop, and you're hoping to make at least that amount. Let's see, where are we right now? At 357. So you're risking like 60 points to hopefully make, you know, 60 points. 1-to-1 reward risk is what you're looking at right now. It's going to be tough to get more than that unless, you know, unless this thing builds a higher low along the way, which is possible, and then goes from there, which is possible. We just don't have any of those things right now, so we can't make those judgments. So that's Ethereum against the dollar. And again, like you're going to see with Bitcoin, it's the same idea. I mean, it almost looks the same. They're all showing these buy signals. So we have to just be careful. We can't take them all, like I've been pointing out. We can't take them all. We have to choose. So if you like Ethereum more than Bitcoin, then, you know, go with that one. Or if you like Chainlink better than those, you know, go with Chainlink, but it's all the same. If you take them all, it's all the same trade. I always have to remind people of that, because you don't want to get caught in one giant trade that's the same and then the whole market turns against you. It's not a good position to be in. Remember, risk first, okay? Risk first. Reward comes as a result of good risk management, not aggressive trades, all right? So that's Bitcoin. Again, quick review there. Thank you for asking, Michelle. Jay Watt, can you check in the, okay, can you check in with the coffee trade? J-O. So J-O, let's see. What is J-O? That's obviously not this bank. Oh, wait. Oh, is this coffee? Like the commodity? Coffee? It looks like the coffee tracker. Okay. So yeah, that's what this looks like. All right, interesting. No one's ever asked me for this one. Interesting. Well, right off the bat, what do I see? Range. Okay. I don't like this chart, by the way, because it's got a lot of spaces in it, which I'm not too crazy about. It means this instrument is not a great instrument in terms of volume. But there's other ways to trade coffee. Obviously, you could trade the CFD. You could trade the futures outright. There's many different ways you can trade it. So right off the bat, these are the inflection points that I see, and that's the range that you are in. Now, recently, obviously, this thing has a higher low. So, you know, and it's made that higher high. Again, great example of a failed high situation where it tried to fail, but look, it's trying to hold. So although it initially failed, it's not following through. Just because you get a failed high or a failed low doesn't guarantee it's going to follow through. On top of that, you have this inflection point or that range high. So not a good place for longs, in my opinion. If anything, if you're long, this is not a bad place to reduce risk. Okay, or if you have a position, you take some off, and then you see if you want to let some ride and see if it breaks out. That's the effective behavior to do at such a location. Otherwise, you're waiting for a long setup, and you know you're dealing with a range. So either you get one somewhere here in the middle, which is not the best place, or you get one around here somewhere. Okay, somewhere in that zone. Those aren't bad places, or maybe you get a failed low if coffee wants to pull back that much. Those would be the inflection points to consider for new longs. All right, so I don't trade this instrument, so I can't tell you much more than that. But you know, when I see a range like this and we're at the range high, buying off the bat, no. Okay, if anything, buying, you should be thinking range low. If anything at a range high, should be selling. Shorting, aggressive, that's aggressive because you do have some bullish structure in here, or taking profits or something. Okay, so thank you for bringing that up. I hope that gives you some perspective there. Alice, can you look at VOW3 for profit taking? I have a couple of shares for free by trimming out before. It is representing 6.5, so would like to make it lower to around 4%. Okay, Alice, let's take a look. VOW3, what is that? Volkswagen. Okay, let's take a look. So first thing I look for in these things, again, inflection points. I could see the recovery, right? The March recovery. I see this right here. You're at basically an inflection point, and then you have this range low over here. Here, let me point out that range low right there. So you're inside of this range, and you're at the range high. So Alice, to answer your question, which again is profit taking, there's a couple of ways you can go about this. You're at a location where profit taking makes sense, all right? But the thing is, you don't really have any technical reason to take profit. Both of these candles are green, right? Obviously, today's candle is closed, right? Because this is a European exchange here, so this is closed. No reason to get out, right? I don't see a red candle. I don't see a pin bar. I don't see any previous day low taken out. I don't see anything. All I see is a location, okay, the inflection point. So if you've reduced profits up to this point, you've taken some profit off the table, great. If you want to reduce more, like I said, there's a couple of ways you could do it. You can reduce some at the first sign of selling, meaning it takes out a previous day's low or something like that, and you say, okay, I'm going to reduce some more here. Or you could use a trailing stop, okay? Perhaps you put that stop behind this low over here, 144.76. Is this thing in euros? Yeah, in euros. Okay, so 144.76 euros. And as if this thing keeps pushing higher, you just keep manually trailing that stop behind the previous day's low. At some point, you're going to get stopped out, okay? And you're not going to get the high. But what that does is it opens the opportunity for you to catch the breakout. And if this thing goes to some ridiculous high, you'll also be part of that, okay? Which will give you the option to exit some at the high on your own, manually, you know, at your discretion, because you're at the high, and that's a good thing to do at highs. So you have, look, you have, as far as potential goes, check this out. You have this gap over here, all right, which is likely to give you some, that's a possible inflection point right there, right? That area right there. So 160. So, I mean, it doesn't hurt to try to let it ride. You have a winner, let your winner ride, right? That's usually a good thing to do with winners. So those are a couple of choices you have with that. You know, your goal is to reduce your exposure to, you said, 4%. So those are a couple of ways to do it. And, you know, if this thing starts breaking out and this thing starts to go vertical, you know, sort of candles that look like this, it doesn't hurt to keep reducing a little along the way until you reach your 4% exposure target, okay? And then you try to hold on to some until you get a sell signal. And a sell signal can look like this, you know, a bearish pin bar. It could look like this over here, a couple of bearish bars together. Those would be sell signals, and that would be a good time to reduce more aggressively, you know, or adjust more aggressively, and that's okay. So I hope that makes sense. Nice trade though, nice one. So I hope that answers your question. All right, Ludus, okay. So Henry, what are your thoughts on MLHR? I have a 22.5 put, okay, and was going to let it play out, but it's near resistance. I wish I took that G Pro. Well, you know, what did I tell you? I remember the G Pro. We talked about that, and that was a great candidate for a weak market. You see how that works? So, Henry, so let's take a look here at MLHR. All right, how am I doing with time here? I know I'm getting close to wrap-up time. Oh, yeah, okay, 50. So I'll go at this a few more minutes, and then we'll wrap this up. So if I don't get to your symbol, I'm sorry. But, you know, if you're a customer of ours, just put them in the chat room as well. I get to it, you know, either tonight or tomorrow. But, you know, again, I appreciate all your questions. So let's take a look at this. Herman Miller. So you have a 22.5 put and is going to let it play out, but it's near resistance. 22.5. Let's see where that is. 22.5. So you're doing okay with this thing, right? Your strike price is 22.5. And not bad. All right, so here's the thing. Nice weak close. This is a good sign, especially in the face of a stock market that's trying to recover. All right, you don't have any kind of bullish price action here at all. You're coming off of a lower high, which is good. That's all supportive. And you have, let's see, as far as targets go, or inflection points where you can expect some support, these are your points, okay? You broke one, and it looks like you're closing below that. So that's good. At this point, Henry, if it stays looking like that, I don't see any reason to try to give it a little bit more of a chance. Now, yeah, it doesn't hurt to play out. One thing you can do, I don't know if you have more than one put. You know, if you have one put, it's a little tougher because it's not like you could lock one in and then let one ride. It's a much tougher decision because it's like, you know, you're giving up a lot of opportunity. If it keeps going, you're like, why do they get out? So if you want to let the market help you make that decision, the market says right now that there's no reason to get out because that's a weak close. Now tomorrow, you know, or as the week plays out, if you get like a bullish pin bar or something, or some kind of bullish candle and it closes on its high, that would probably be a much better reason to get out, you know, to close for whatever profit you've got, because it's probably at that point trying to bounce. All right, especially at this point, the region that you're facing, that's a failed low region, but you're not getting any failed low reaction. So again, this is still pretty favorable for you. What would be nice is if the stock market cooperated. So this thing is acting relatively weak because, again, stock market closed nice. This thing is not closing nice. But this thing may play catch up. So those are the things to look out for. Other than that, I mean, I don't see a reason to exit this thing now. You know, give it a chance, especially since the broader structure's in your favor. Look at this. Broad lower high. You have a lot of things in your favor there. Okay, so again, I could be wrong, and I don't want to mislead you, but that's based on this structure, that's what I'd be considering. Okay, so something to keep in mind. It's tough to trail stops and stuff when you have a put it's best to just, let that thing do its thing. And if it gives you a hard time, you just get out for whatever you can, because you have time working against you when you're long. And you always have to be cognizant of that. Okay, it's not like having to stock outright. So thank you for bringing that one up. And thanks for bringing up G Pro. That was a good one. All right. Okay, cool. Oh, yeah, Workhorse. DJ's bringing up Workhorse. We'll take a quick look. We've been in this stupid stock. Look at that. Do you know how long we've been in this stupid stock? Since July. Okay? Since July. I call it a stupid stock because we had to sit through all this nonsense. And it was not easy to sit through that. But, and some people I know exited early because it was very iffy, especially with that stock market pullback. And then out of nowhere, the move comes. Okay? That's a lottery ticket. There's no skill. There's nothing that said, oh, I knew this was going to happen. Now, target 3. Did we reach target 3 today? The high is 23.84. No, we didn't reach target 3. But we're on our way, right? Target 3 is 25.85. So this is a nice breakout, and you can't do anything with this now. If you're not in it, you're not in it. You certainly don't want to jump into something that's looking vertical like this. But yeah, so, if you have some, just let it run. Again, relatively strong to the stock market. When the stock market was pulling back there, this thing was kind of holding up, and that's just like, that's weird. I thought this thing would have sold off more. But I guess, the news against Tesla, whatever was going on with all that drama and news and whatever, I don't pay attention to any of that. We just saw the higher low, we saw the consolidation, we saw some buy signals, and we bought it. And that's all you can do, right? And this is all the trade information right here. So this one, by the way, I believe was a limit order that filled below the market. Okay, it actually filled below the market and eventually went our way. And it almost went to our stop a couple of times. So great example of being patient and just letting it play out and minimizing yourself from the equation as much as possible. That's what we try to do. That's why I don't like making adjustments or exiting early a lot of times. Unless it's like so obvious, it's like, okay, you know what? Trade is green, like the dollar franc. It's green. Let's just take the money and forget about it. We can always get back in. It's not like I'm blowing out a red trade here. I'd rather do that than let the trade go red. But most of the time, it's better to just let this thing do its job and stay out of it. Keep your nose out of it. Let the market work. And sometimes it takes some time. Sometimes you're going to get stopped out. That's what people need to understand. This is a probability game. It has nothing to do with your intellectual skills. It has nothing to do with how analytical you are. It has nothing to do with how good you're at math. Okay, it's up to the market. Anyway, so thanks for bringing that one up. Alice, you guys don't forget to, oh yeah. I guess Alice must miss my promotional lines there because he has to remind me. I know I've been a little slow on the promotional side today. So yeah, again, if you're new to Greenbridge, make sure you register for the channel here so that you get an email notification every time I do one of these. Make sure you press the like button if you like it. If I'm helping you out, if I'm providing that perspective for you and you're finding it valuable, I like to know that. And make sure you check out greenbridgeinvesting.com. We do have swing trade signals by text and by email. We have portfolio management ideas, and we have a chat room where we share a lot of perspective and ideas. And most of the people here in this chat are in the chat room anyway. So it's just like all the chat room people. But like I said, we have a 7-day free trial. So try that. It makes sense to try it out. And if you don't like it, you can always quit and not have to pay anything. All right. So thank you, Alice. Mike, CNYA. Let's take a look. All right. And let me see, how many more do I have to go here? Can I fit everyone in? Kevin. All right. So yeah, I'm going to probably have to wrap it up after that. I'm sorry, DJ. Let me see if I can do these quickly. The China Etf. Okay, interesting. So again, as you can see, right, spotty. It's very spotty, which is characteristic of not so great volume, but okay, no problem. I see that inflection point right there. I see this right here. We're in the middle of this range. You have a failed high in place, and it looks like price has reacted to it. So at this point, I don't like this location. I don't like the middle of the range. I wouldn't do anything with this, especially with these China stocks. They're very sensitive to, geopolitical news and stuff like that. Also, is it any coincidence that they topped with the market? I mean, the market was pushing new highs and everything else. And look, I mean, this thing This thing looked like it was trying to break out and it failed. So I don't know. As far as looking for longs on something like this, because obviously this thing is strong, right? There's nothing bearish about that. I would be looking for support points, okay? You sort of have one here, but like I said, you're kind of competing with the middle of that range. So I'd look for the next support point. You have one here just above that gap. I don't know how accurate this gap is because I don't know what's responsible. A lot of times a gap can act as support or resistance. But if that gap is just, some kind of whatever, I don't know what it is, your next inflection point is there, which is 31.65. That would probably require a pretty significant market pullback and is probably not the most realistic price to expect anytime soon. So, what's more realistic? You're probably looking at a range of prices in this area, right in there somewhere, which is like 34.5 to 35.5, something like that. So just keep that in mind if you're interested in the long. What's tough about where it is right now is it can go either way. It may go higher from here, it may go lower from here. There's really no way to measure. There's no structure. There's just nothing there. It's just a couple of little candles. I'd at least want to see a little group of candles, kind of something like this or something. Okay, so I would hold off on that at this level. At least wait for a much clearer inflection point, if that makes sense. Okay, so thank you for bringing that one up. Let me see what else we got here. I want to see if I can fit you all in. Kevin, GRWG. This one, yeah, someone's brought this up. Maybe it was you, Kevin. I know someone's been talking about this. Reminds me of Jumia. And, with that vertical price action that we saw. So this is interesting. You do have this. This is nice. This is price stability, okay? When we always talk about, wait for the pullback and then wait for price stability, this is what we're describing right here. It tried to go higher, it failed to go higher, and then it failed to go lower and produced a double bottom. And then it produced this little inside bar, and you took out the high of the inside bar. That's a buy signal, Kevin. That definitely fits the criteria for a swing trade long. And especially in light of the stock market trying to bounce, that's not a bad candidate. Question as far as risk, 13 even is where you'd be measuring your risk from, somewhere around there. Okay, something like that. And your potential, like I said, you want to be conservative with targets in this environment because we don't know where that market's going to turn again. And, bearish momentum is still possibly in play. So targets may make sense around those levels, 17.5 or maybe 17.25. And then maybe like that $20 area, something like that. I would not be looking for new highs or anything like that. I mean, it can happen, but I just think it's a little aggressive for the situation that we're facing right now. Now, look, like I said, I could be wrong. Some news could come out, and next thing you know, this thing's at 30. But we have to go by the probabilities presented by the price structures because there is some sense to that. Okay, there's reasons why these structures develop the way they do. It's not all random. Okay, a lot of it's random, but it's not all random. So in this case, yeah, this makes sense as a buy. And I should talk to Andrew about this one. We just have to be careful. We have to be mindful that we don't want all of our members getting overexposed. So that's why we don't send out 20 different stock trades. We may look at a group of 5 of them and say, okay, we're going to pick one of those 5. We're not going to take all of them. And then maybe Andrew will say, oh, but if you want an alternative to this one, you can look at this one, you can look at that one. But then that's up to you. But we don't want to have, we really try to avoid getting people overexposed, especially in a market that may not be fully complete as far as its pullback. Okay, but I like this as a long. Nice, thank you for bringing that one up. All right, so DJ, well, let's see. You know what? What time is it, DJ? I'm going to do it for you. Okay, I'm going to do it for you because you always come to my webinars. You always come to everything that I pretty much do, and I like to go out of my way for our members. So let me see what we got here. Microsoft and Roku. All right, so I'll do them real quick, DJ. MSFT. Well, so remember, Microsoft is going to be a market stock, okay? And it's going to follow the market pretty much, NASDAQ, S&P. It's going to do what they do. And look, I'm not surprised to see this, all right? Microsoft looked like garbage yesterday, and the S&P also looked like garbage, and now the S&P has the recovery candle today, and Microsoft is going along with it. So I would use that as a gauge. Microsoft is in a location. It's not a bad area. That's where you'd be measuring your risk from. Tough. If I'm going to short something relative to the market, I'd rather do it in the S&P or the Nasdaq and not in a stock by itself. Okay. I mean, what if they do something out of the blue and call for a stock split or something crazy like that? You know, like it can come out of nowhere and then you're caught. So I would rather do that like in the S&P. So that's what I would anticipate something out of this. This is great for day trading. You know, since it has some room to go higher and you want to try to capture a little piece of that move, that would make sense. But you're not exposed to any broader movement. If this thing takes out the previous days, or today's low, I should say, 206.71, if it takes that out, that's not really good. Okay, it shouldn't do that, especially since it had some resistance there previously around that 215. All right, and today's high is 214. It's reacting off of that. You're dealing with that. So those are some things to consider. But I personally wouldn't do anything with this stock. Okay, I don't know what your idea was for that, but that's the perspective on there. Use the S&P as your guide. Now, and then you said Roku. I like Roku. I mean, I like the stock. I don't like where it is now. This thing got hammered nicely, very nicely. Look at this. Okay, I would like to buy this thing, just not here. Look where we are, right? So this 167 area, it's an old resistance. We're still fooling around in the area. Today's high is 165. I wouldn't short this thing. I wouldn't buy this thing, not at this level. If I'm going to do anything with Roku, it's a strong stock, very tough to short. I would be looking for longs, and you have this level right here, okay, or you have this old level over here. So you're looking at like 137, 138, something like that, or the mid 140s. Those would be the ideal inflection points if we get that broad market pullback. If we get that short-term market bounce, this thing may pop a bit, but again, it's more appropriate for like day trades. I wouldn't take the chance with the swing trade. There are much better stocks, like that one that Kevin just pointed out here, GRWG, like something like that. The structure just makes a lot more sense compared to something like this, which is like 50-50. I mean, this can go either way. Okay, so just wanted to point that out. So I wanted to get to your charts. Thank you for bringing that up. I think I got everyone's charts in here. All right, no problem. So Kevin, yes, not worried about missing the trade. Just, okay, cool. No, that was it. I like that one, Kevin. Thank you for bringing that up. All right, everyone, so I'm going to wrap this up now, over an hour here, but I wanted to I always like to make sure I get, if I can, get everyone's questions in and answer, because that's the whole point of this, really. It's not me showing charts. It's me showing charts that you want to see, so that you could make decisions with much more confidence. All right, so with that being said, please make sure that you subscribe to the channel here if you like what I'm doing. Register for the, go to Greenbridge, register as a free member, sign up as a free trial member, try out our active investor chat room, see what some of our trades like, what some of our trades are like. If you're registered at Greenbridge, you'll get the Trade of the Week email that we try to send out every week. And if you like my video here, please let me know. All right, everyone. So thank you all for your participation. I will see you all next time. Enjoy the rest of your day, and I'll speak to you then. Thank you.